First monetary policy with Mr. Urjit Patel, and clearly a unanimous decision that has come in with the new Monetary Policy Committee, every member asking for a rate cut. Does it go on to show that finally the focus is back on growth for the country?
Certainly it's a decision which will propel growth. It is something which many people in the market had been expecting. The fact that it is the result of a wide-ranging discussion shows that the sentiment was unanimous.
So, the fact that the new Monetary Policy Committee has also highlighted that due to the 7th pay panel recommendations, as well as if the standard rate for the GST is at 18%, this will have a moderate impact on inflation. So do you think that going forward from here, the target that we've set out, the medium-term target for inflation, that is at some sort of a risk?
The inflation policy which government has been following and which Reserve Bank of India has also shared, it talks of maintaining inflation within a band. As of now, the CPI inflation is within that band, and in this policy statement also Reserve Bank has said that they are hopeful that the band will be maintained during this financial year. The pay commission outgo and the money which it has put in the hands of people certainly increases their purchasing power. It releases more money in the market. To that extent, it does have an impact. But as I have said in the past, that increased demand in the market also has its positive side. After all, we are talking about boosting demand in the economy. So I don't think it's going to have an impact which is beyond this band. As far as the GST rates are concerned, I think this is a call which the Council will have to take. They are yet to meet and decide on what the standard rates would be. So at this point in time, it's difficult to say what that rate would be, what impact it will have on inflation. In any case, whatever decision is taken by the GST Council will take effect from next financial year.
Right. So, the fact that at this point of time, although monsoons have been good, but they're still below the mark that the Met Department was talking about, 106% of the long period average. So there is some sort of a shortfall that we're witnessing in certain areas. With that regard, do you think that, the fact that there is little shortfall of monsoon in certain areas, that could lead to some sort of a trouble with respect to sowing? Or, what is it that the government is actually looking at?
The data which the IMD has released, it does indicate that almost 86-87% of the region has received above normal rains. There are some pockets where there has been a shortfall. However, if you see the scatter of the rains, it has pretty much matched the requirement of irrigation of different crops. So on the whole, even if there are some deficient pockets, it is not going to have any significant impact on food grains production, which has been projected to be much above last year's mark. So, yes, there has been some shortfall in monsoons as compared to what was projected, but whether it will have an adverse impact on the food grain production, that is a clear no.
Right. So you expect that this benign inflation outlook is going to continue for a while, isn't it?
I think all of us should hope for that.
All right. So, let me go back to the question of rates, because, the markets were clearly happy with the kind of, decision that has come in from the RBI, from Mr. Urjit Patel in his debut monetary policy. Does it also go on to show that now, to much extent, the RBI and the government are in sync or on the same page with respect to pushing growth? Because earlier there was a lot of, always it used to be projected in such a way that RBI and the government are not on the same page. So how do things really stand at this point of time?
I would say that the Reserve Bank of India generally would take decision according to their assessment of the circumstances in the economy. And this time, RBI, of course, had inputs from the other members of the Monetary Policy Committee, who were clearly outside the Reserve Bank of India, but they were in their own right eminent economists, eminent thinkers, and their inputs and the views of the RBI members, as it has been reported, although the minutes are not yet out, but generally it has been a unanimous decision. So I think this Monetary Policy Committee has read the ground reality in the country and has taken a decision which, according to them, is good for the economy.
So the global rating agencies are also saying that, due to the lag effect of the monetary policy easing, this has led to a condition that investment is not really picking up on ground. And given that, now the Monetary Policy Committee has taken note of the ground situation, what is the scope of rate cuts that one should expect in the times to come?
Certainly, I cannot prejudge what the Monetary Policy Committee will recommend and what will be decided eventually.
But do you think there's more case for it, for a cut?
Everybody, all investors like a lower rate, but all depositors like a higher rate. So I think the delicate task of the Monetary Policy Committee, the delicate job of the Reserve Bank of India is to balance the ground reality in the economy with the expectations in the market. And I think they will take whatever decision is required to boost the sentiment in the market. RBI is equally interested in economic growth as they are interested in containing inflation.
Many say this is festive cheer ahead of Dussehra and Diwali. How do you? But much of it will also depend on whether the banks really transmit the rates to the consumers at the end of the day. So, from Finance Ministry, what's the word to the bankers?
Finance Ministry does not intervene in how the individual banks fix their own interest rates. It's clearly an autonomous function for them. But the banks who are important intermediaries in the market, they, I'm sure, will make their own assessment of what the market is looking for. They will also look at their own internal strengths, how they are positioned, and take a decision accordingly. Even today, different banks have different interest rates for different products.
Yeah, but the 125 basis point rate cut that happened last year has still not, been percolated down to the consumers to the whole level, right?
This is precisely what I am saying, that after all, bankers are financial intermediaries, and if they are in the business of purveying finance, which the market is demanding, then they will have to look at a rate which is acceptable to the market.
Right. Thank you, sir. Thanks a ton.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.